Saving long and little by little can be a frustrating experience to achieve our financial goals. But regardless of which stage of life you find yourself in, all of us have goals, short-term and long-term. Hi there, I'm your host Paramita Chatterjee and a very warm welcome to the NSE FinWiz Season 6 powered by CNBC TV18, and we are here to help you answer all your long and short-term money goals.
Since 1999, Mindtree has been delivering innovative IT solutions to more than 2,000 global clients. Along with offering digital transformation and technology services, the company takes an agile, collaborative approach to create customized solutions across the digital value chain. Its deep expertise in infrastructure and applications management has helped create strategic assets, which in turn aid in running businesses efficiently. NSE FinWiz, with its theme, Invest in Yourself, Your Path to Prosperity, is at the Mindtree campus in Bengaluru to understand the aspirations of these techies and help them grow their money to fulfill their financial dreams.
Financial literacy is a key aspect of everyone's life. To achieve their individual goals such as buying an house, planning for children's education and marriage expenses, creating corpus for retirement. And it is also an important that some of the financial habits like saving, spending, investing and protecting are embedded in the early stage of young professionals' career.
Financial literacy means to me is like how we are managing our funds and how we are investing it to fulfill our goals. For the future, we can, like, if you have a money, we save it and then we can plan for our futures.
Wealth management for employees like me who have just started their IT careers is very important to understand how to manage wealth so that it meets our lifestyle, as well as we can be financially independent as well.
Today's FinWiz program, I'm really excited to get to know about a little more about financial wealth management. Today I expect to clear some of my doubts which I have related to my retirement and some foreign travel.
Hello and welcome to the NSE FinWiz Season 6 powered by CNBC TV18 right here at the Mindtree campus in Bangalore. The theme this year is Invest in Yourself, the Road to Prosperity, and we'll be discussing over the course of time about your personal finance goals. How can you manage your money better so that you can really extract the maximum and achieve your financial goals? And to discuss all of that, I've got a young audience buzzing with questions, and I've got two seasoned investors who are going to advise our young clients about how to make their money grow for them. So let me introduce them to you. I'm Paramita Chatterjee, the host for the show, and my guests for you are Vikram Singhvi, the co-founder at VenWealth, and Anil Rego, who's the founder and CEO at Right Horizons. Gentlemen, welcome and thank you so much for joining us. Usually youngsters start out by thinking first about tax planning. Oh my God, I have to put that 1 lakh rupees under Section 80C or, put some of that money away. Vikram, would you say that's something that a lot of youngsters think about personal finance in a wrong way, in the sense it's far more than just tax planning?
Predominantly, yes. I think a lot of them, to start with, think about the fact that the PF takes care of a portion of their Section 80C, and what is it that they need to do beyond that to take care of Section 80C. Some of them end up taking unnecessary ULIP policies or LIC policies, which need not necessarily take care of their investments from a future perspective, but it's done just in the nick of time to take care of their Section 80C planning.
Okay, so a nick of time planning. How do I change that, Anil? What should I be doing differently? In the sense, I've got about 10,000-15,000 rupees to spare. Right at the beginning of the year, I get a nice bonus. How should I now look at my money?
At the beginning of the year, it's a good idea to plan for what you want to do this year. Anyway, at the beginning of the year, again, you will be giving your declarations to your company, saying that this is how much I will invest. So maybe take it one step further and just plan, okay, what will I do? And why not I start it off? So even if I just have to do my, let's say, ELSS tax saving fund, okay, it may be a great idea to do it systematically. If you need to, let's say, invest 60,000 rupees, at the end of the year, it will be really difficult, putting together that 60,000. But if you just say 5,000 rupees a month, right, that makes it a lot more easier, and probably you'll be able to, manage it much better. The second benefit of that is you also manage risk a little well.
So start in the beginning, right when your salary is coming in, when the new financial year is starting off. But Vikram, today you've got a plethora of instruments. I mean, it's confusing even to market participants or market watchers like us. I mean, ETFs, balance funds, all sorts of, combinations coming up.
Basically understand what is the kind of risk that you want to take with your money, whether you're looking at it from a capital appreciation, long-term horizon, or are you looking at it from a shorter-term horizon, and identify products accordingly. You've got to be more realistic about it, and in case you're not able to decide by yourself, then there are lots of professionals available for you to go to approach and talk to them and understand how the market functions, how these products function, what their features are, and then basically try and come down to a decision in terms of what suits your requirement the best.
But Anil, isn't that where the confusion begins? You decide, if I am in the deciding place and I'm not an expert, that's where my head starts swimming. Would you say that there are some basic sort of investment avenues, basic buckets that you must have in your list?
I think for most of us, the mutual funds has become one of that avenue. And what I would like to also highlight is most of us think that mutual funds means equity, right? There's a whole area which is there, which is also debt, okay? And it's also a very, very large segment. And debt basically is closer to our bank fixed deposit, okay? So safe, secure avenues.
So you're saying definitely take on some debt mutual funds as well. Don't just put it in equity?
Yeah, so you need to look at what is the mix that you have, right? So one thumb rule is that how much of equity should I have, right? So a thumb rule is 100 minus your age. So if you are 40-year-old, then you can take up to say 60% equity, and the rest ideally you can put it into debt and safer avenues. Now this is what is called as asset allocation. So look at what I need to put where, right? And now there are also others. For some of the women out here, maybe the gold is something, okay? Jewelry is one, but you also have ETFs and funds as well, where you can use it as an investment.
Vikram, obviously people are a little scared, when they look at that kind of sum, that kind of allocation. 75% of my hard-earned money going into equities. I'm seeing markets barring the last few trading sessions. November has been a horrible month. What would you advise people? Does that thumb rule really work in our current volatile times?
Equity investments generally go through cycles, and a cycle could last for up to 5 to 7 years.
So if you are investing, if these guys, I mean, we've got a plethora of them, they haven't even begun nibbling the pie of equity that you should be doing. They should be not thinking about it for the next 5 years, Anil? Is that what you would advise?
Yeah, definitely. So if you are looking at equity, you should always look at a slightly longer tenure. Not slightly, maybe at least 5 years.
The other thing, tell me, how necessary is insurance as part of my investment? Or should I not look at it as an investment at all?
Insurance and investment are two separate things. You probably look at insurance purely from a term insurance perspective and not from a investment perspective. To give you an example, if a 25-year-old needed to take a 1 crore insurance cover, if he buys a term insurance, it probably costs him 8 or 9,000 rupees a year. If he tries to get that same cover through an endowment policy, the premium could be somewhere close to more than 1 lakh.
Right.
Which really doesn't make any sense, because the kind of return that you generate in an endowment policy would be maybe 6-7% and not higher than that. So if he takes a term plan instead, and the balance amount is invested in, say, equity mutual funds over a period of 20-30 years, that can grow into much, much more than what the endowment policy will eventually give him after 30 years.
Okay.
So keep your insurance and investment separate.
Separate. I think that's a really big golden rule that a lot of us fall into. We're discussing personal finance, the do's and don'ts, especially in the digital era. Let's go across to our guests to ask them. As a young person today, I have a lot of forward planning schemes aside from just the EPF, which is there. What are those options which are available for me? So one is I have my equity and debt bucket. I have my insurance bucket. And what about the long-term planning for my pension? Should I start doing that now at such a young age?
You need to look at your goals in two different buckets. Okay, so one of them is maybe what is my shorter term stuff, but eventually you need to also look at your longer term goals like retirement. And the earlier you start, the better it is. You can actually make your money work for you much better. NPS is definitely an avenue for us to consider. what has made it better is two things in recent times. One is that you get a tax benefit when you invest. So, you could actually save some tax out there. The second is a recent announcement that happened is it's become 60% tax-free, okay, from what was 40%. I would say that, people need to look at various avenues and analyze them from different perspectives. Okay, maybe some of the pension plans, again, most of the time it's not understood well enough and whether it fits into your portfolio. If you want to look at something like that, you better be clear that, this is something that fits into your overall portfolio.
As a youngster, I have needs and I have requirements. So when I talk about financial planning, how much of it should be liquid ready cash and how much of it should be locked into these kind of instruments?
So there are two things that you need to consider over there. One of them would be what is the kind of emergency fund that you need to create for yourself. Ideally, I would say 3 to 6 months of your regular monthly expenses. That should be an emergency fund that's available to you at any given point in time. And apart from that, if there are any short-term requirements or goals that are coming up, say for example, if you've got something that you want to take care of in terms of your child's school fee, or if you've got a vacation plan, and which is coming up in the next 6 to 12 months, then ideally you keep that liquid and not invest it from a longer term perspective.
So let me get this straight. I should keep at least 3 to 6 months of what is X amount of my salary.
Monthly expenses.
Monthly expenses aside.
Yes.
Always.
Yes.
That should be a liquid fund available to me, and that should not be touched for my travel expenses or,
Yes.
or any such
Yes.
thing. Where do I find the money for my travel expenses, or just the good things in life? Anil, is there a rule for that?
No, I think some of that, since you're earning monthly, I think that's the best way to, set aside, maybe budget it, what is it that you need to do. And I would go one step further into saying that, plan it at the beginning of the year and then maybe start off investing itself rather than, after my expenses, then I go back and invest. I would suggest you flip it over and say, first put your money away for your investments in terms of when you plan it at the beginning of the year. And the rest of it, you will expand
like
to fit.
A utopian policy to follow in today's day and age. Easier said than done. Vikram, would you agree with Anil?
I would agree with him because I think that's what needs to be done.
But
obviously, it's easier said than done. But if you start putting in some amount of discipline, it may not happen from day one. But once you start putting in some amount of discipline in terms of deciding that this is what you need to do on a monthly basis, may not happen for the first 3 or 6 months, may be a bit difficult, but you will get there. And that happens when you're talking to an advisor on a more continuous basis and reviewing your monthly expenses on a more continuous basis.
Okay, what happens to my home loan? But everybody wants a home at the end of the day. Where do I squeeze in that home loan? And should I do that?
See, sometimes it's an emotional decision. In fact, the previous session, somebody said, I have 20,000 a month, but I want a 5 crore villa in the next 5 years. Okay, or 3 years. So those are things which we need to, ask ourselves, is it too much, right? And sometimes I may say choose one particular goal, and it may be say my property, and I cannot do it in small amounts, and either I have an EMI or I have to maybe make a down payment, and I may just be slogging myself a lot just to achieve that one thing and pay my EMI every month. So you need to also balance it out and see what is the right time. It's very good that today youngsters are looking at their houses and stuff like that much more earlier, but just plan it a little better, that it should be something which is affordable. It should also be within a range where, let's say, if I lose my job, right, it's something I should be able to continue to pay for.
Absolutely. So don't stretch yourself beyond that. Don't go thinking about that 5 crore house if, obviously.
So just to add to one point to that, general thumb rule sometimes is that your debt to income ratio should be 40%. In the sense your EMI ideally shouldn't be more than 40% of your take home salary.
That's a great number. Okay, we'll all remember that. I think many of us have not adhered to that. So, okay. So, let's take questions. We've got some great questions from our audience. Panelists, are you ready? We've got, I'm going to call out his name, and Vikash Kumar.
My dream is like buying a house in 10 years. So, I want to know how I make my investment portfolio diversified to avoid the investment and make maximum profits.
Okay, so Vikash wants to buy a house in 10 years and he wants to invest 25,000 rupees, right?
10 years is long term, so ideally you would look at it from an equity mutual fund perspective. Don't confuse yourself too much by looking at sectoral funds or anything, just stick to diversified equity funds. 25,000 on a monthly basis, probably look at maybe splitting it between 2 to 3 funds, and from a longer term perspective, look at equity mutual funds. That's it.
We're discussing personal finance, the do's and don'ts, especially in the digital era, because information is available everywhere and most of it is at the click of a button, including products and services. So how should you, as a consumer, as a financial investor, really plan your investments in the digital era? Let's go across to our guests to ask them. Vikram, you know, we've heard a lot from our young audience about going online. What are the advantages and perils of doing so?
The advantages are obviously that it's much more easy to execute in terms of everything being available at the click of a button. From cost perspective, it is much more cheaper compared to some of the other avenues that are available there, like banks or financial advisors. But one of the major disadvantages over there is that there is no hand-holding in terms of how to take you through a turbulent market.
Okay, great. Some great advice, but there are a lot of questions out there. Very interesting. Let's welcome on to the show our Vatsal Bhasin.
I have just started my career. So as per the mindsets, like there are many risk factors involved in stock market exchange and mutual funds. So how would you justify this to a newly investor who would like to invest in such markets?
Understand volatility. Maybe start with, let's say, your tax saving funds. Do it systematically. And a lot of it maybe initially, just because you're not aware, you could start off with debt funds. As time goes and you get a little more confidence and experience, I think then slowly you can sort of broad base. The place to start for a beginner can be, let's say, either a balanced fund. You can look at, today there are risk averse funds which are, let's say, funds which manage risk better.
Keep in mind that you've got to again think about it from a time horizon perspective, right? So once you start investing, whether it is balanced funds or equity funds, start small and build over it. Once you've experienced how the market functions or how the volatility functions and you get a little more confidence, then start increasing the amount that you want to invest.
Okay, so we have a question from Raghavendra R. Patil.
And one of the goals that I have is I want to accumulate a retirement corpus of around 10 crores. What I'm not sure about is I have under 25 years of working life left. So what is the retirement corpus that I should be looking at? And how do I actually arrive at a retirement corpus, ideal retirement corpus? And how do I, what is the amount that I should set aside for achieving this retirement corpus?
25 years, obviously you've got to, if you can start off by figuring out what is it that you can put aside on a monthly basis, start with that and take that forward as on a yearly basis, keep increasing that. Now, what is it that you need to invest on a monthly basis to get to a corpus of 10 crores? Could be in the range of, say, to start with at least about 75,000 to a lakh a month, and then build on that over the course of next 20 years. Identifying some good funds that have a great track record, and with that, some asset allocation towards debt. Once you approach your retirement goal, you start reducing your equity exposure in order to mitigate the risk a little bit and get to that corpus that you need to.
Okay, great. Thank you so much.
Yeah, thank you.
Okay, next question is from Arvind M.
As a fresher, I want to know to where I need to invest, and I want to know what are the credible sources from where we get the knowledge about this investment, mutual funds, etc. Which are the credible sources?
Today you have a few very, very good sites which are there, like a Value Research Online. You have the Money Control site. Value Research has a lot on the mutual fund side. Money Control has mutual funds plus equities as well. So I think between these sites, there's something that you can learn quite a bit. There are a lot of blogs and stuff like that which you can sort of follow.
On, say, a BSE site or an NSE site, obviously you will find information with regard to the companies in terms of their balance sheets and their numbers and all of it. But from a mutual fund perspective, Money Control and Value Research are your best options. Even under that, you'll probably see certain phrases or jargon which are a little too technical. But for you to be able to understand those terms, maybe reading up a little more through those blogs and understanding those words a little more to know what is it that that fund exactly does.
Okay, great. Thank you so much. Okay, our next question is from Shweta. Shweta, welcome to the show.
I have a confusion, like is it good to invest in properties or investing in equity funds over the period of 5 years, which is going to give us the best returns?
Properties from an investment perspective and equities from an investment perspective, over the course of next 5 years, I'm probably a little more tilted towards equity. We've seen what has happened in the real estate sector for the past 2 years. Post demonetization, we've obviously seen certain layback in the real estate sector. So for the next 5 years, I would definitely get equities over properties.
Thank you,
Thank
Shweta.
you.
On that note, it's been an educative and entertaining episode of the NSE FinWiz Season 6 powered by CNBC TV18 right here from the Mindtree campus in Bengaluru. We'll catch you again for the next show. Thanks for watching.
It was really exciting presentation today, because Mr. Anil and Vikram, the way they have explained the things, it was really, intellectual and very understanding about the financial thing. Earlier for me it was a zero of understanding, but right now I actually understood that where to invest.
When you're just starting out in the market, like seeing your options in the investment field, it can be really confusing for someone who's just beginning. So this session was a real help regarding that. Like we can understand which things to start with and then change our investments.
It was a good session. We got some new information which we didn't find somewhere else.